Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Do domestic partners have to file taxes together in California? This is a common question with a somewhat complicated answer, because how you file depends on whether you are talking about federal taxes or California state taxes. The short answer is generally no for federal taxes, but yes for state taxes, and understanding why is crucial for avoiding tax issues. First, let's talk about federal taxes. The Internal Revenue Service, or IRS, does not recognize domestic partnerships as a marriage for federal income tax purposes. This means that even if you are a registered domestic partner in California, you cannot file your federal tax return using a married filing jointly or married filing separately status. Instead, each domestic partner must file their federal tax return as single or, if they qualify, as head of household. This is a key difference from legally married couples, who have the option to file jointly or separately for federal purposes. Now, turning to California state taxes. California law does recognize registered domestic partnerships as essentially equivalent to marriage for state income tax purposes. If you are a registered domestic partner in California, you are generally required to file your California state tax return using a married filing status. This means you will typically file as registered domestic partner filing jointly or registered domestic partner filing separately. This creates a unique situation where your federal filing status and your state filing status are different. So, how do you handle this disparity? It gets a bit tricky. For your California state tax return, you will often need to prepare what's sometimes called a mock federal return. This is not a real tax return you send to the IRS. Instead, you calculate your income and deductions as if you were filing a federal return as a married couple. You then use the information from this hypothetical married federal return to correctly complete your California state tax return. This mock return helps ensure you are applying California's community property laws correctly to your income and deductions for state purposes. California is a community property state. This means that for registered domestic partners, income earned and assets acquired during the partnership are generally considered to be owned equally by both partners, even if only one person earned the income. This community property rule applies to both federal and state tax calculations, even though the IRS doesn't recognize the partnership status directly. This can make filing your federal return as single or head of household more complex, as you still need to report your share of community income and expenses. It is not as simple as just each reporting what's on your individual W-2. Because of these complexities, especially with community property rules and the need for a mock federal return, many domestic partners in California choose to consult with a qualified tax professional. They can help navigate these specific rules and ensure both your federal and state returns are filed correctly. Thank you for watching and learning about tax filing for domestic partners in California. If this information was helpful, please give this video a thumbs up and consider subscribing to the channel for more straightforward explanations of complex financial topics. We appreciate your support.